Ladies and gentlemen, good day and welcome to the Tejas Cargo India Limited H2 FY25 Results Conference Call, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni from Kirin Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Tejas Cargo India Limited. From management team, we have Mr. Chandar Bindal, Chairman and Managing Director, Mr. Yogesh Jain, Chief Financial Officer. Now I hand over the call to Mr. Chandar Bindal. Over to you, sir, for the opening remarks.
Thank you, Chandni. Thank you. And good afternoon, everyone. Myself, Chandar Bindal, and I am the Chairman and Managing Director of Tejas Cargo India Limited. So on behalf of Tejas Cargo India Limited, I extend a warm welcome to all of you for joining this inaugural earnings conference call. So we are truly delighted to have opportunity to engage with our stakeholders and walk through you the performance highlights of the second half and full year of this financial year 25. So I will begin with the introduction of the company. So let me share a bit about our origins and how we built this business from the ground up. So initially we started small with aggregating fleet from market and gradually building the relationship with the clients. But our real journey started in 2014 when we acquired our first set of 10 company-owned trucks. From there we grown steadily, and today we operate around more than 1,300 fully owned trucks and trailers that are operated and run by company itself, serving clients across various sectors like e-commerce, express cargo, steel, cement, manufacturing sectors like FMCG, FMCD and all. So we are basically a full truckload company and asset heavy by design, because we believe that with asset heavy, direct control over fleet enable us to provide unmatched reliability, better service quality and more efficient cost structures. Around 95% of our business comes from large corporate clients, and hardly 5% are MSME clients. And nearly all contracts are on annual basis, ranging from 1 year to 4 years contract periods with committed volumes. This model helps us as building a resilient and scalable business with high customer stickiness. Most of our top clients have been with us for a decade now. And regarding the technology, we have an in-house tech team with every aspect of logistics cycle, like from getting an indent to billing to receiving the payments, is all on a single proprietary ERP platform, which is designed by our in-house team. So our centralized control tower monitors 24/7 the real-time basis. So we embedded LOT systems, ADAS, geofence, and driver fatigue monitoring system to ensure the safety, on-time performance of the drivers. So drivers are managed through a tech-integrated incentive model, and the average utilization across the fleet is 85%. These efficiencies translate into significantly faster delivery times. So we move freight from Delhi to Bangalore like in 44 hours, and against the industry norms, like people are doing that in 70 to 80 hours. So this is just a basic of our company, brief of our company, and for the financial performance, I would like Yogesh and our CFO to let you go through the company financial performance. So Yogesh, up to you.
Thank you, sir. Thank you everyone for joining the call. Let me walk through the performance for H2 as well as financial year 25. In terms of financial performance, we have delivered a strong set of numbers for FY25. Our total income stood at 508.24 crore, making a healthy 20.3% growth over FY24. EBITDA increased sharply by 50%, reaching 103.69 crore, driven by higher fleet utilization, better cost controls, and operational leverage. This translates to an EBITDA margin of 20.4%, a significant improvement of over 400 basis points year-on-year profit. Net profit grew 44.7% to 19.14 crore, while our EPS improved to 10.50, up 38.2% from previous year. reflecting the profitability momentum we are building on the back of a stable, efficient asset-backed model. Looking specifically at the second half of FY25, we maintained a strong margins with an EBITDA of 58.13 crore, up 27.6% over H1, primarily driven by lower costs in terms of diesel and other procurements like tire, which forms a bigger part of our expenses. Net profit for H2 came at INR 10.39 crore, showing an 18.8 sequential growth. These results reflect the scalability of our model and our efforts to improve efficiency across operations. Notably, our net profit margins improved from 3.13% in FY24 to 3.77% this year. With a disciplined approach to execution and continued investment in technology and infrastructure, we believe we are well positioned to sustain and accelerate this growth trajectory. Looking ahead, we are set to accelerate growth journey through strategic initiatives focused on expanding its service offerings and strengthening operational capabilities. We plan to offer integrated logistics solutions, increase our trailer fleet to support higher cargo volume and scale up presence across India. These forward-looking steps are aimed at improving multi-location connectivity, boosting operational efficiency, and deepening client engagement across diverse industry verticals, laying a strong foundation for sustained and scalable growth in FY26 and beyond. With that, we are now open the floor to your questions and looking forward to an engaging interaction. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and one on your touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Reminder, if you like to register yourself for questions, you may press star and one. Anyone who wishes to ask a question, you may press star and one now. A reminder to all participants, if you wish to ask any questions, you may press star and one. Anyone who wishes to ask a question, you may press star and one now. We have our first question from the line of Aditi Roy from Patel Advisors. Please go ahead.
Thank you. My first question is, could you share the timeline and expected impact of the new fleet expansion on capacity and margins?
Can you come again, please? I didn't get your question.
Yeah, I just wanted to know what is the timeline and expected impact of the new fleet expansion on capacity and margins?
So, right now we are already in a phase of expanding the fleet. So every year we are expanding the fleet from 150 to 200 trucks or trailers. That might come from a replacement of trucks or addition of trucks. So within the buying of the trucks, in 2 months' time, we get the revenues and the margins start immediately after the 2 months of the buying trucks. So this is a regular process. We keep on buying around 150 trucks and trailers every year.
Okay, sir. Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. We have our next question from the line of Abhishek Sharma, an individual investor. Please go ahead.
Yeah. Hello, sir. Am I audible?
Yes. Please tell me.
Yeah. So my question is, are there plans to commercialize your in-house technology platform, perhaps as a SaaS solution for third-party fleet operators?
No, not right now. So we are not looking for a SaaS model, but yeah, we are looking to extend our technology to our customers and vendors who gives us a better utilization and a transparency in the work. So we will do that, but not exactly as a SaaS platform.
Okay. And what kind of analytics are you deploying to optimize routing and fuel usage?
So that's everything is, as told you, that we have an in-house ERP. So everything is with getting the diesel, tire expenses, toll expenses, all have been budgeted in the ERP, and that is monitored by single platform.
Okay. And so my last question is, how do you see the current regulatory and policy environment impacting the logistics sector?
So right now, government is highly focused on the improving the logistics sectors. As you know, that everyone is looking to improve the infrastructure to get the better roads, for getting the trucks to move the truck faster, removing the toll tax, and planning to make it through satellite. So there is a good amount of government initiative we see for the logistics sector to improve in near future.
Okay, so thank you, sir.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Priya Jain from Green Capital. Please go ahead.
Hello. Hello, sir. How are you?
Yeah, good, man. Thank you.
Am I audible?
Yeah, tell me, man, tell me.
Yeah. So I have few questions with me. So, what was the average fleet utilization rate in H2 compared to Y-on-Y?
Yeah. So, Yogesh will answer this question. So, Yogesh, can you explain the question?
Sure. Ma'am, you're asking about the fleet utilization in H2 versus year-on-year, right?
Yes, sir.
So, if I compare it with the H2 of FY24, my fleet utilization grew approximately 7.5%. Last year, it was around 78.5%, and this year we have around 85%. So this fleet utilization, I'll explain a little bit about how do we calculate or how do we illustrate this fleet utilization. So from starting to loading to unloading plus 1 day plus transit time is the fleet utilization, and any number of days which is beyond this calculation is considered to be unutilized. And this also includes if fleet is into regular maintenance, or it is standing idle, or it is breakdown and standing in the yard.
Good to hear, sir. Also, if you can share insight on the maintenance cost per vehicle, and do you think any technology has helped you to reduce it?
So yes, regarding that, maintenance cost depends on the model to model. So like we have different kind of models of trucks, like ranging from 9-ton payload capacity to 14-ton payload capacity. So it ranges from around 0.75 per kilometer to 3 rupees per kilometer on different models. So yes, so about technology, so we have in-house maintenance yards at different locations in India. So where we put a preventive maintenance check in our ERP, whenever the vehicles come, so there is a job card open at our warehouse, and it will show what are the type of maintenance it requires. And secondly, we have all the telematics in all the vehicles on which show us that this vehicle needs to get this rectification so that it should not get breakdown in future. So we are adopting all type of technology for that.
Also, sir, there is huge, nowadays it's very booming, IoT-based safety system. So how does IoT-based safety system impacted your delivery timelines and incident rates, if you can share?
So we are using IoT basically for the safety of drivers and also once the trip is started from Delhi to Bangalore. So IoT systems help to geofence the route first of all, so he knows where he has to drive, and if he diverted from any location, the IoT system immediately update him that they are driving from the wrong direction. First is that. Second IoT is that we have ADAS and DMS system installed in every of the vehicle, which gives alert to the drivers if he is distracted from the driving, like on road, harsh braking or something like that. So all the technology we have incorporated in every vehicle.
Good to hear, sir. All the best. That's it from my side. Thank you.
Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. Anyone who wishes to ask a question, you may press star and one now. We have our next question from the line of Chandresh Singh, an individual investor. Please go ahead.
Yeah, first of all, thank you for the opportunity. Sir, my question is, what are your volume growth and revenue guidance for FY26?
So for this, I would like Yogesh to answer you better.
For the FY26, we are with the raising of IPO funds, we are expected to grow better than the last year, and probably with deployment of capital has been the IPO proceeds, deployment of IPO proceeds has already been done for fleet. So we are expecting to close the next year by 650 crores is the number that we are targeting for FY26.
Oh, okay. Sir, can you share more details on the warehousing expansion plan, locations, capacities, investment required, etc.?
Oh, yes. So regarding that, we are in talks with all the clients. So as I told you, we are working on different sectors of industry like cement, steel, FMCG, FMCG. So all our clients require warehousing, but we are not rushing for just getting into warehousing. So we will see where the viabilities are there. So Pan India is open. We can do it anywhere. So, but we will see the viabilities, because we will not do it just for the sake of getting into warehousing. So wherever we get the margins, good margins and good business and long-term business, then we will surely incorporate that.
Oh, okay. So how do you plan to scale your presence in rail logistics with Concall? Any revenue targets from that vertical?
So we have already signed the MOU and contract with the Concall. So the trials will start soon, within a month time. And once we do the trials and we get the costing part and the profit margins on that, so scalability depends on all the. As I told you, our scalability in any division depends on the profit margins we are making. So we are not much focused on the top lines only. So we see the bottom line first.
Oh, okay. So yeah, that's it from my side, sir. If I have any questions, I'll join back with you. Thank you.
Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. We have our next question from the line of Dhanraj, an individual investor. Please go ahead.
Hello.
Yeah, Austin.
Am I audible?
Yeah, tell me, boss. Tell me.
Yes. I have a couple of questions. I'll start with the first one. How the customer retention rate has been over the last 2 to 3 years?
So as I told you in my speech also, that the customers which we started with are still in our list, so they are with us for decades. So we are very customer centric. So once the customer is getting onboarded with us, so they remain us for long term. And usually our contracts are also like that. So the contracts are from 1 year to 4 years.
Okay.
Just to add on to the context, the company since was incorporated in 2021, earlier the company was in a proprietorship firm. So we have carried on this business from proprietorship to a private limited entity, which is now a listed entity as of since 2025, 24th February.
Okay. So the next question. So how much of your capex in FY25 was allocated to technology and digital infrastructure?
So our capex in the technology is regular going. So we are not looking that we are raising fund and we will invest in technology. So technology is our internal part. So before the IPO, also we kept on investing in the technology. So the technology which we are talking about is the 3 years back which we have developed. So we are not looking for the funds raised or IPO for to invest in the technology. So it is ever growing. So we have in-house tech teams, so which keeps growing and adopt all the new technologies which come into market for the logistics sector.
So, are you looking for like any kind of strategic acquisition or partnerships to expand these capabilities?
But there is so much noise coming from the back.
One second. I'm saying, are you looking at any strategic acquisitions or partnerships to expand these capabilities?
So we are in talk with so many people. So again, the question comes, which acquisition or mergers or something is better for the company, for the top line and bottom line. So if we get some good opportunities, we will surely look after that.
Got it. Thank you. That's all from my side.
Thank you. Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. We have our next question from the line of Mahesh Seth, an individual investor. Please go ahead.
Yeah, hello. Can you hear me?
Yeah, good evening.
Yes. Question is that what percentage of your fleet runs on alternate fuels or is EV enabled?
So we have started this 6 months back only. So we have invested into diesel, except diesel, we have invested into CNG. And right now we are looking for the electric truck deployment with Apple, DHL and Amazon. The trials are already going. So in future, yes, there will be investment in CNG and electric vehicles.
Okay, got it. And you also mentioned that 95% of your business comes from large corporate clients.
Yes.
So how do you plan to diversify or de-risk your customer base?
So we are diversifying in different sectors. So earlier, if you talk about 4 or 5 years back, we were majorly into e-commerce and express cargo. Then we diversified into cement sectors. Then we diversified into steel sector. So today, you name any company, any big corporate in steel sector, we are working with them. Then we come to FMCG sectors. Any company in FMCG sectors, LG, Samsung, Haier, Blue Star, you name it, we are working for them. So we have a diversified clients in all across the sectors.
Okay, so you are diversifying as a sector.
Yes, not as a client base, as a sector we are diversifying.
Okay, got it. And can you also elaborate on nature of your contracts? Like what's the typical tenure or how much revenue visibility do you have?
So in that, it depend on client to client. So I said earlier also, so our client give us a contract ranging from 1 year lock-in to 4 year lock-in with the dedicated volumes and dedicated revenue that we will get either in 1 year or 4 years. Depend on client to client.
Okay, it depends on client to client. Okay, got it. Got it. That's it from my side. Thank you.
Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and 1. Anyone who wishes to ask a question, you may press star and 1 now. We have our next question from the line of Ananya Swaminathan, an individual investor. Please go ahead.
Hello.
Yeah, please tell me.
Yeah, this is Ananya Swaminathan.
Yeah, Ananya.
Yeah, I wanted to know, are you witnessing any pricing pressure from clients or competitors in the FTO segment?
Pardon, I didn't get you. Please come again.
Hello?
Yeah, tell me.
Yes, are you witnessing any pricing pressure from clients or competitors in the FTO segment?
So in India, if you say the market is always price competitive, so we cannot do anything with the price of the client which they want to offer. So we can do what we are better at. We will utilize our assets to its maximum utilization. So that's where we can just compete with the market rates and client rates and the other competition. I would like to say that only. Because pricing is not in our hand. Pricing is the client and competition. But what in our hand is utilization of our assets and making that working for profitable markets.
Okay.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. Anyone who wishes to ask any questions, you may press star and one now. We have our next question from the line of Priya Jain from Green Capital. Please go ahead.
Hello, sir. I have a few more questions on this, like driver training and incentive programs. So can you elaborate on your driver training programs and if there is any incentive programs and how are you addressing the driver shortage issue?
Yeah. So first of all, I would like to answer the first question about the driver training. So in every yard pan India, so we have a driver training room. So wherever there is a instructor for the drivers, so we keep on some type of trainings. Like first is defensive training. So what defensive training for all the drivers for which we give the certification also from the third party. So third party comes to our yard, they give the defensive training to drivers, then on-road training to drivers, then the safety training to drivers. So these type of driver trainings is a integral part and are a routine for us. And your second question was how do we manage these shortages of drivers? So for driver retention, what we have done is that from the starting of inception of this company, so we have a tie-up with, you can say, few villages, like 8 or 10 villages from different parts of India, from where every driver who get their new licenses after the trial and testing, they come to our company only because we help them socially and morally and financially. We keep them have the education of their children, so we keep them helping, so they come to our company only.
Understood, sir. Also, any plans to get into air cargo?
Pardon?
So, any plans to get into air cargo business?
Air cargo. So as I tell you, there are multiple training logistic, air cargo, freight forwarding, sea, 3PL, 4PL. So we are not hurrying anywhere to get into particular sector. So first, what we do is we evaluate the profit margins, the top lines, the bottom lines, and the market situations. Then we get into any sectors. But right now, the air is not our focus.
So are you also looking for any acquisition or mergers in logistics?
So we keep on talking to so many people, so many companies for acquisition mergers, and whenever we get some good opportunities, we will surely go for that. And likewise, we are also going for mining and these government sectors also. Coal India, we have filed a few good big tenders. So if we get that will be added to our revenue.
Also, sir, can you share bifurcation of our fleet?
Fleet means type of fleet you are asking?
Yes, types of fleet.
So type of fleet, if you can say in percentage wise, it's 70% are containers that are 32 feet single axle for 9-ton payloads and 32 feet multi axles for 18-ton payloads, and 30% are trailers that are 40-ton payloads.
Also, sir, as I'm very new to this sector, so as an investor, where can I see Tejas in next 5 years?
So, as you see, if you can see the past growth, so I can just say that it will keep on growing and at a better growth than last 5 years. So as the numbers, I cannot disclose the numbers, but yeah, I can surely say that the numbers which you have seen in the past 3 years, it will be much better than that.
So not in terms of numbers, but in terms of business, how big Tejas can be in the upcoming 5 years?
So upcoming, not 5 years, we have a target of next 3 years, so we will be 1,000 crore plus revenue company.
Good to hear, sir. All the best. And
Thank you. Thank you.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one. Anyone who wishes to ask a question, you may press star and one. We have our next question from the line of Rajesh Bhosle, an individual investor. Please go ahead.
Hello, sir.
Yeah, hello.
Thank you for giving me the opportunity. I have a few questions.
Yeah,
Yes, sir. What are your capital expenditure plans for FY26?
So every year we are investing around 35 to 40 crores every year we are doing in a capital, like buying of new trucks.
Okay, sir. And how will it be funded?
Previously it was funded. We are purchasing trucks on our internal accrual also. So, and we bought trucks from the IPO proceeds also. And likewise, it will go in future also that we will put the money, internal money and buy from the debt also.
Okay, sir. Sir, next question. Are there any plans to expand your operations into international markets or cross-border logistics?
Yes, yes. So as previously there was some few questions that are we looking for some acquisition? So we are looking for some companies and we are in talks with some companies for freight forwarding who are doing some freight forwarding on earlier. So we are going to acquire them.
Yes, sir. And sir, which industry verticals are showing the most promising growth for coming years?
So right now we are going into power sector like solar and coal and electricity and hydropower and wind power. So power will be always be there. If your country has to run, there is a need of power. So power sector we are focusing. Power and infrastructure.
Okay, sir. That's it from my side. Thank you.
Yeah. Yeah.
Thank you. A reminder to all participants, if you wish to ask any questions, you may press star and one now. Anyone who wishes to ask a question, you may press star and one. As there are no further questions, I would now hand the conference over to Ms. Chandni from Kirin Advisors for closing remarks.
Thank you. Thank you everyone for joining the conference call of Tejas Cargo India Limited. Further, if you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference. Thank you, sir. Thank you, Manav.
Thank you. Thank you, everyone. Thank you.
Thank you, everyone.
On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.